Hi, it's Connie from Prosperity Finance, sharing the best financial tips so that you can be more successful with achieving your financial goals. Recently, we have a YouTube subscriber ask us a question. I'm going to buy a first property. Should I buy it as unoccupied or rental property? It's actually a really good question, and we often get asked with similar questions. Now, it's okay to have open-minded at the inquiry stage, and in fact, that's how we add value to you. However, before you make finance application, we recommend that you actually decide what is the purpose, because when you make a submission to the banks, you can only have one purpose, one way or the other, but you can't have a both. Now, if your intention, for example, is for home, but you rent it out, then potentially there's some tax implication, for example, and you also obviously didn't tell the truth, right? So it's really important that we can make a decision, given the current situation, what would be more likely intention of the property we are about to purchase. Okay, firstly, let's have a look why people may treat the first property as a rental property. It is very common to see people buying first property as a home, but certainly some people buy the first property as a rental. Number one, you may live with your family and you pay little or no rent at all. If you are the lucky ones and you have the ability to borrow and you have a deposit, you probably want to buy a rental property so that you can get onto the property ladder early and build equity, build wealth quicker. Number two, you may have limited budget. The ideal first home probably worth $1 million, but your budget, given your borrowing capacity and your deposit, you probably can only afford $800K. So maybe rather than wait for a few years, maybe it's best to get onto the property ladder and buy a rental property. Number three, maybe the location is not ideal. Maybe you want to live close to work or close to your children's school, but it's a really good opportunity at the moment. So you can purchase that property. It doesn't have to be in the same city as where you currently live and work. It can be in a quite very far from where you live, in a different city, etc. Now, number four is I saw people want to buy property that close to their family, or maybe that's the dream home when they retire. They want to secure that property right now and rent it out, and later they may relocate to that location and live in that property and get close to the family or live the lifestyle they want to live. So generally speaking, there are four scenarios where people want to buy first property as a rental. So what is the difference between buying a home and rental? So there are many differences. Let's have a look one by one. I'm a financing girl, so I will start with a finance difference. So firstly is the deposit requirement, or LVR, loan-to-value ratio. So as unoccupied, you only need 20% deposit or less. With rental property, you need at least 30%, and some bank ask for 40% right now, unless it's a new property, which is LVR exempt property. The second difference is the servicing ability. What the servicing means is how much loan you can afford based on your current income. Now, with unoccupied, you can have a borders if you have enough bedroom. With a rental property, if that's your first property, you will have rental income. You won't have a border income, but you will have a rental income. But on the other hand, you are more likely to have a rent expense as well, unless you live with your family for free. So what is the net income? Depends the rental income and rent expense. So the servicing ability could be quite different. And repayment method. With unoccupied, it's very common to see principal and interest repayments. Interest only is can be considered, but really rare. Because bank also curious why you want interest only. Why you're not paying down the principal? Are you expecting financial hardship or something like that? So it's very unlikely you get an interest only. Versus investment is very common to have interest only. It's also for tax purpose, so interest only is very common. Now, next difference is ownership structure. With owner-occupied property, company structure is very rare, unless you had it as investment property at the start, and then later you move into that property, so it's under a company name. But otherwise, it's normally under your personal name or under family trust. Whereas rental property is very common to have a company structure for tax purpose. And if you already have a home, normally if you upgrade home and you're not selling your current home, I would recommend the upgrade home structure, whereas rental property is relatively straightforward finance structure. In terms of bank appetite, with owner-occupied, the banks perceive as a safer lending type because no one wants to lose their home, right? Versus rental property is just a investment vehicle. So home normally is got more appetite than investment property. So with investment property, sometimes bank have less loan terms or higher tax rates so that you borrow less. Or they don't do pre-approvals for new-to-bank customer if you're buying rental, but they're happy with owner-occupied property. So in general, owner-occupied property has a higher bank appetite. Now, in terms of property location, so let's move away from finance. Now, with the property location, with a home, it's unlikely your home is in a different city or town from your work, unless it's quite close. For example, I had a client bought a home in Napier, and they work in Hawke's Bay. Their home in Napier is only 40 minutes drive, so that's okay. But normally, home and work in the same city or town. Versus rental, you can buy anywhere in New Zealand. There's no limitation, right? Now, buying rules is the next difference. Normally, with a home, it's more emotional, right? You don't want the roadfront house. You want the back-end house. You want to have a backyard for your kids to play without worrying about safety. And you want, close to work or close to the school, etc. It's very emotional, and sometimes you pay a bit higher than the budget or higher than the market value because you just fall in love with that property. Now, with a rental property, you're very calm, you're very logical, you stick to your rules. Rules about the rental yield, about the capital growth potential. It's about the condition of the property. Can you add value to it? What is the location, etc. So it's very logical, and you don't normally pay premium price unless it's got big potential. But normally, you don't want to go over your budget. Possession. That means when you purchase that property, if they have existing tenants, is a vacant or the tenants stay. With owner-occupied property, you can't really have a tenanted property because you want to live in there, right? Versus a rental property, it can be vacant or tenanted. And normally you want tenanted so that you have rental income from day one, right? So that's about possession of the property on settlements. Now, the next part is about, and it's probably a very important part, is the knowledge and experience of buying a home. Now, with the owner-occupied, it's relatively straightforward, especially if your situation is quite simple and you have a good advisor around you for legal matter and for finance. Versus rental property, and normally with investment-grade property, it attracts a competition. So you need higher skills in terms of setting buying rules, selection of the property, negotiation of the price or condition of the agreements. And you also, if you go to a auction, you want to be experienced and have a good auction skills. And also in terms of settlement process, you want to be very familiar. Now, if that's your first time buying a property, you don't have experience knowledge, and if you can have a family or friends who have personal experience in buying rental property, that could be a big help. Now, landlord obligation is the next one. It's become more and more important now, especially the amendment bill that take effective. You need to know in and out about the landlord obligation if you are going to own a rental property. For home, you don't need to know at this stage. Last but not least is the tax obligation. We briefly covered in the beginning. That's the tax implication. I don't know if you have heard bright line rule. It's been around for a few years now. If you buy a home, is exempt from the bright line rule. But if you buy a rental property and if you're selling within 5 years, you may have to pay tax on that. So it is important for you to consider the intention of the property even before you lodge the application, the finance application. Because once you've done that and you're not going to follow that intention, it could have those differences and implications. So thank you so much for listening. If you want to have personalized help, if you are thinking about buying your first property as a rental, feel free to get in touch with us. We are more than happy to review for you. Thank you so much. I will see you next time. Bye-bye.